To remain updated with the latest business news, click on the bell icon.
We invited expression of interest from some of the stress asset players. We got interest from very large international stress asset players. And currently we are in the process of shortlisting. So I think by next month, we would be able to finalize our partner in this. So we are trying to conclude the entire transaction by March end or maybe first quarter of the next financial year, if there is any delay. And then the entire, NPA book of the bank would be shifted to the ARC. And the bank would be like a 0% NPA.
In our business, of course, is a very good improvement has come to the last quarter. There is two factors we find out on that. Monsoon was in a very good. And the ground level people's business have been returned back. And they are already communicate to us worst is over from their level. And because of consumer demand have been increases in the rural and semi-urban areas more, and the people also return back to the business. And so that the credit demand also increasing gradually, which shows that our credit growth has come in the 10% in the last quarter.
The volume growth is something which we are very buoyant about, and we've got an 18% volume growth and about a 26% value. When we look at margins, obviously the gross margins sequentially have gone up given the fact that we took two big price increases in Q3, one in November and one in December, amounting to about 15%. Overall, PBDIT margins are also up from the last quarter sequentially, and they have gone closer to about 19% overall to that extent. So therefore, what we are seeing is a very strong and positive trajectory with respect to how inflation had hit us overall in the first half of the year.
One of the factors that has kind of muted margins this quarter is really a mark-to-market loss, which operationally should not be looked at, because this is a notional loss, a mark-to-market loss of 77 crores, which has really shrunk the margins a little bit. But if you actually remove that, particular loss, then margins actually are at a very healthy level, 28%. So it's much stronger than last year.
Indian GAAP profits were impacted because of the excess mortality reserving that we did due to COVID claims. If you remember, in Q1, we started off with 700 crores. We increased it further. And we have continued to increase. We made a further 55 crores in Q3, just as ample precaution in case Omicron rears its head in terms of elevated death claims. Not that we expect to, but just as ample precaution. So that has also impacted the profitability.
If you like the video, do like, comment, share and subscribe.